Start there. Mr. Chairman Clayton, why don't we start with digital currencies? That's where it's going to end. So Chairwoman and I have a similar thought process on raising the question. Based off your current analysis of the Libra project, which is just an idea at this point, a white paper, Chairman Clayton, do you believe that Libra is a security?
I'm not prepared to make a decision like that here. We have to see how different assets function to decide whether they would be a security, a commodity, a currency, or not. But if what you're doing is using a digital asset to raise capital for a project with the idea that you're going to get a return as a result of investing in that project, sounds like a security.
Okay, so, but let's acknowledge there's a larger ecosystem to raise money globally outside the U.S. jurisdiction, right?
Yes.
So we need to have appropriate regulation, but too onerous regulation just drives off the innovation from the United States and the upside potential for investors. Is that correct?
That is correct.
I know, Commissioner Pierce, you've done a significant amount of work in this space, but for cryptocurrencies, we see that Blockstack had their Reg A offering approved. Now, walking through that process, Commissioner Pierce, do you believe we have a pretty solid ecosystem for cryptocurrencies to exist in the United States and to raise capital in a regulated environment?
I think we still have work to do to make sure that people can develop digital assets in the U.S. in compliance with our rules. I would like to see us be a little bit more forward-thinking in ways that we might accommodate unique aspects of digital assets. For example, digital assets that are utility tokens. I don't know that the securities law framework that we have right now is the appropriate framework for them, and so I'd like to see us think about creating some kind of a safe harbor. Again, the idea is to allow...
Is there current law for the SEC to write regs around that?
I think we have authority that would enable us to work on something like that. I still am giving it thought, but I think we do have authority that could allow us to do that.
Chairman Clayton, how would you respond?
We have a lot of discussions about this. I agree with Commissioner Peirce that, look, to the extent this technology facilitates capital raising, consistent with our investor protection, and I think it's been pretty good in the private space. I mean, I'd like to have more access for individual investors. If we can use it to have more access in a protected way, I'm good with it. And I'm good with exploring ways to do that. But what we saw in the ICO space was something that, I don't think anybody thinks that was a success.
Okay, so let's move to crowdfunding. I raised this in my opening statement. 11 pages of legislative text that we passed in a bipartisan way, not without dissenting votes, but we had fewer than 15 dissenting votes on the House floor, and bipartisan nature. So investment crowdfunding, regulation crowdfunding, such as the limits on individual investment limits, the total amount raised, and the overall goal of this. Is the SEC willing to relook at those 685 pages of extensive, onerous regulations?
Yes, and I think we should. I think if you look at the market for small business capital formation, crowdfunding shows that you can get started. You can get up to, and I'm going to talk about pretty large valuations, but they're small in the range of businesses. You can get up to $1 million company going with reg crowdfunding and some of our other exemptions. It's really hard to grow a business from, say, a $1 million business to a $50 million business because you're talking about individual investors and crowdfunding at $1 million. You're talking about professional investors at 50. There's kind of a big gap there. Things that we can do to facilitate capital formation in that gap so our small businesses can become larger. I think that's an area we should focus on.
Okay, so to go much more broadly here, Chairman Clayton, we have fewer public listings than we did 20 years ago. That means mom and pop retail investors don't have the same potential that they did 20 years ago for their long-term savings. Is this a concern to you? And if so, what are you doing to address it?
It's a very big concern of mine. The great thing about our public markets is mom and pop investors invest right alongside with the same deal as professional investors. I like seeing capital raising in that environment. This group passed the Jobs Act. I think the Jobs Act helped encourage companies to go back into the capital markets. One of the things we've been doing is looking at those Jobs Act provisions and seeing if we can extend them.
Thank you.
The gentlewoman from New York.